Hello again, everyone. In this technical analysis of the stock market video, I call it storm warning because it is April after all, and we're getting all these spring storms. But there are some things that are brewing here in the stock market that I think could mean that a storm is about to break. Again, no guarantees. There's no guarantees, no certainty at all when it comes to the stock market. But what we're trying to do is lay out possibilities and possible paths forward. We got to watch and see what does the price action tell us as it starts to unfold, especially next week. All right, so let's start off here with the first little scenario I want to take a look at here is the Dow versus the S&P 500. So it's interesting that the Dow had a closing all-time high here on March 29th, which was Monday, okay, of this last week. It pushed to an intraday all-time high and a closing all-time high. 3 days later, the S&P 500 had a new closing all-time high, and of course the news was broadcasting a lot about the fact that it closed above 4,000 for the first time. So 3 days apart in here. Now it's really interesting. I'm going to go back and look at back in February of 2020 what happened. Let me pull that up. So here we are back in time to February 2020, and right here on February 12th, we had the Dow closing at a new all-time high here, 29,551.42. And 4 days later, not 3 days, but if you go over to look at the chart over here, and we're counting 4 trading days later, the S&P 500 had a new closing all-time high in here, and it closed at 3386.15, and then that was all she wrote, and then it just broke down from there. So, getting the new closing all-time high doesn't guarantee anything. I find it really, really interesting that the S&P lagged by 4 days, a little over a year ago at the top, and we're lagging by 3 days now. But then there's also a confluence of a couple of other things. Let's take a look at those. Okay, so the second point I want to make is that we could be at a very critical Elliott Wave turning point here on all of the major indices. So it's very possible that here on the Dow Industrials that this final WXY and this ABC within the last leg, the Y leg here, has completed with that high that occurred on Monday. That's totally possible. Now it's a short little wave 5, but it doesn't, there's no rule that says it has to be a certain length or anything like that. And when I drill down and take a look at the 65-minute and the 130-minute charts, there are 5 waves in here. We're definitely getting the divergence that shows up. So it's totally possible that with that high, that was it, that was the end of wave C. We're going to find out next week. Do we continue to push higher, or do we roll over and start to break down? Now let's take a look at the SPX. Now here's the scenario on the S&P 500. Very possible, okay? There is an alternative to, just like for every scenario, there's an alternate count that could be pushing, could have a slightly different scenario moving forward. But here's one that I find really, really interesting. Here we have 5 waves up within the 4th primary wave, and in this last 5th wave, it looks like an ending diagonal pattern. Now it's not perfect, but it's close. Okay. The other thing that's really interesting is we look here, when I'm looking at wave 5, I'm talking about the little Roman numeral 5 with the red circle around it. Okay. That's the minute wave 5. And I compare wave 5 to wave 1. Equality occurs at 4,034.52. Where did we close on Friday? 4,019.87. We're literally like 14 to 15 points away from that, if not there. I mean, you don't really have to go there, but we're close. We're very, very close. For all intents and purposes, we are there. And so what happened here with the move on April Fool's Day, April 1st, we got a throwover that occurred here in this final push that occurred to the all-time high on the S&P 500. Throwover, by throwover, I'm talking about where you draw the trend lines for the ending diagonal pattern, and many times that 5th wave will throw over the top of that trend line and then collapse back down and turn over and start selling off. All right, so that is a possible picture that lines up. There is an alternate count. I mean, absolutely. You could say that in reality, wave 4 that ended here, we're still in the mode of trying to figure out 5 waves to the upside. And this is why you look at it and say, okay, there are a couple of possible paths. Which one happens as prices start to unfold next week? And if you start to roll over and get this kind of selling that breaks down out of this pattern, then you sit back and say, okay, now it looks like we're on this path forward. Now let's take a look at the Nasdaq 100. Now the interesting thing about the Nasdaq 100 is it looks like it peaked on February 15th, had a 5-wave move down that was very strong that occurred, as everyone is aware, with all the sell-off that was happening with all the tech stocks, with a low of March 5th. Since then, it looks like we are right now in a zigzag pattern back for a wave 2. We've gone fairly deep. We're above the 61.8% retracement of wave 1. I'm talking about wave 2 as a percent of wave 1. We're back in this deep retracement zone. So now we're looking for this last wave to finish off and then roll over and come back down. I think the real sign that this is underway is we break this trend line in here. I think that will be a very strong indication that wave 3 is underway. Of course, the alternate count is that wave 3, intermediate wave 3, didn't finish here, but that it finished here, and then we had a wave 4 pullback, and that we're really working a 5th wave to the upside. That's the alternate. We're going to see what happens this coming week with the price action. Okay, and again, a wave 2, it can go deep. I mean, the rule on a wave 2 is that it can go all the way back. It's still a wave 2 as long as it doesn't go beyond the beginning of wave 1. All right, so that's the picture on the Nasdaq 100. We'll keep an eye on that. Okay, now I want to pull up a couple of indicators. The McClellan oscillator, this is now at a level where it's slightly overbought, not much. But I think the most interesting thing here is look at the peaks in the McClellan oscillator. Back up here and severely overbought on February 8th. Then we got this peak, a little bit less on March 12th. And then here's where we are right now. There's no guarantee this is a peak just yet. We need to roll back over and turn down to create the peak. But we're sure getting a series of divergence here on the oscillator that's not confirming the move that's occurring in the S&P 500, which is going like this. And the oscillator is going in the opposite direction. Okay. And then the summation index, the McClellan summation index, if I can get this thing to cooperate, there we go. It broke down, days ago, back here on March 1st, broke this trend line. And really what we've had since the highs back here in December has been a series of lower highs and lower lows. We seem to be trending down. Okay, so again, not really confirming what's going on with the stock market. So that's the McClellan oscillator. Now, if we look at the percent of stocks above their 50-day moving average, let me pull that up. Okay, here's how it looks in the S&P 500. We are sitting up here at 85.7% of the stocks in the S&P 500 are above their 50-day moving average. I find it really interesting that the little pattern that's unfolded in here is exactly the same pattern that's occurred in the SPX. Okay, kind of a little rising wedge type pattern. But when you go and look at the New York Stock Exchange, we're kind of in the opposite direction. We're a lot more weakness showing up on the New York Stock Exchange. There's only 69% of the stocks above their 50-day moving average. So it's going to be really, really interesting how this resolves, because this is a lot more stocks than the 500. I mean, what is it, like 2,600 to 300, to 3,000, something like that. So again, I find this kind of a little bit of a flag that's waving, saying, okay, something's not quite here in sync, something is amiss. Now I want to take a look at the HYG High Yield Bond Fund, and this has been trending recently higher. There's no doubt. You can see this little counter trend, but we're still a lot lower than where we were back over here in mid-February, not really confirming what's going on with the market. And the other thing that's happening in here is this trend line is a longer term trend line, and it comes all the way back here to mid-year last year. Well, we broke down through that in early March, and then we've kind of pulled back up to it. We've been hugging it ever since. Now, Wednesday, it pulled slightly above it, but here we are sitting right at it on Thursday. It's going to be real interesting to see the way this has been hugging it this last week. Do we continue to push, or do we roll back over and start heading back south again? Okay, that's HYG. So those are some interesting things, I think, that are kind of little flags waving here regarding the market. Now let's pull up Apple and see what it's telling us. Okay, here's the Elliott Wave count I've got on Apple. We had this really strong peak back here in September of 2020, and it was really the end of the fifth minor and fifth intermediate and fifth primary wave up in Apple. It had been trending up for quite a while. We had 3 waves down for an A wave, and this was a little bit of a fake out, but I believe it was a 3-wave move up for B, and that we are really forming a large flat. And this would imply then that we are in a C wave, which means I'm looking for 5 waves down. Well, I need to get the first 5 waves, and I think that is about to happen. I think that's what's going on right now. Wave 1, wave 2, strong wave 3 down. It got very oversold here on the oscillator on the RSI. And then we've just chopped sideways in what looks like a triangle to me. And if that's the case, we have one more push down here to come out of this triangle, and I believe it's going to go below 110, somewhere in the 107 to 110 area, and then we'll correct. We'll have this, that will complete 5 waves, then we'll get a little bit of a correction back up, and then we'll do another push to the downside. But that is the picture I've got on Apple right now. We'll see what happens this coming week. Does this start to break down out of this triangle formation? Okay, that's it for this weekend. Everyone, I hope you have a great weekend. If you felt like the video was helpful, give it the thumbs up. If you're not a subscriber to the channel, hit the little subscriber button. And if you'd like to have more of this kind of information on a regular basis, we talk about this in a lot more detail over here at joehenches.net, Beyond the Chart. Check out the website, check out the membership.